but I think we have been impressed with some of the leading companies.
Welcome to Sustainable Investor. In these interviews, we're looking to dive deep into the sustainable investment strategies of the world's largest and most influential asset owners. And today we're very pleased to be talking to Kaeraa Rasmussen, Head of ESG and Sustainability at PensionDanmark. We'll be talking several aspects of the organization's decarbonisation strategy, both from an asset allocation and stewardship perspective. Thank you, Jan, for joining us. Could you start us off by providing a little bit of kind of background on your organization and your earnings?
Yes, PensionDanmark is a labor market pension fund, and we administer pension savings for some 800,000 Danish workers or retired workers. We have an AUM of 55 billion euros at the moment, and almost all of it is contribution defined, which means that we as an investor can take more risk than if they were defined benefit pensions, of course, which can be important when you talk about the climate investment space. My role is to lead a team that oversees our investments, that they're sustainable not only in an environmental or climate-wise, but also social and worker-wise. As we are a labor market pension fund, our board is also very keen that we look at the working conditions in our investments.
I'll just add to that it's interesting to note that you were one of the first pension companies to have your climate targets to be validated by the SBTi. So let's put ourselves up into the kind of present, into kind of 2025, because PensionDanmark has made a number of investments, including one recently in microgrids. So I'd be grateful if you could kind of provide a bit more detail about how you view the investments in the transition to the green energy.
Yes, I think one size doesn't fit all, and that means that we have to have a number of different strategies in our climate solutions portfolio. And the latest addition is, as you mentioned before, the microgrid fund that we are invested in. It's the first of its kind here in Denmark, at least. And the rationale behind it is that many large power consumers, they want to go green and have electricity fired power in their that they only use green power, and it's difficult to get from the grid as it looks today, but they can get it from a microgrid if at their plants, or it could be at their docking at a harbor, if there are some renewable energy sources installed there. That could be solar power, that could be a windmill or two windmills, whatever. And then combined with some battery storage and artificial intelligence to have a secure backup connection with the collective grid, you can have this microgrid solution for you that should provide you with, that's the vision behind it, with greener and cheaper electricity than you would get otherwise.
How does this fit into your kind of broader approach to the kind of technologies and the innovations that's part of the kind of green energy transition? Are you kind of very broad in your approach, or are there some kind of technologies that are perhaps not ready, or perhaps not sufficiently green to enter into your calculations?
I think we are very broad. We have investments in, of course, in you could say traditional flagship funds that develop solar and wind in the rich countries in the developed world. We have investments in development of new technologies like green hydrogen, power to X, pyrolysis, even pyrolysis. And we also have allocated funds to what I would call advanced bioenergy, not only biogas, but also newer generations of that. And so I think one of the reasons for that is that we can see technically that the green solutions will not be the same in all countries, in all markets. That's one thing. The other thing is that we don't know exactly which of the immature green technologies that will be most successful in the future. So from an investment perspective, it's good business not to put all your eggs in the same curve, so to speak. So it's the diversity strategy as well.
I mean, you've been pretty advanced, really, in terms of your allocations to green energy, and I know that you made a commitment to invest in 800 megawatts of renewable capacity by 2030, which certainly kind of puts you out front, so to speak. What are the lessons that you've learned from the building on that commitment that you want to share with other asset owners?
First of all, I think I would say why we made that goal, because the goal is actually to finance the development and deployment of new additional 800 megawatt capacity with our money. So instead of buying wind farms that are already in operation, this money is targeted development of new wind farms. So the impact of that target is much bigger than if we just wanted to buy and own wind farms. We made this strategy not out of a good-hearted approach. It was because we feel quite safe that we can finance the development and also participate in the development of renewable energy. Hence, we can, through these dedicated investments, harvest the development premium and get a higher return. But it also means that, so I think this is a strategy that could inspire some of our in the asset owner space, that they could look for dedicated and competent fund managers that develop renewable energy. When we look at the achievement of our target, we just made the table up a couple of months ago, and we now sit with more than 550 megawatt developed new capacity since 2021. That's a little more than 3 years. So I think we're well on track to achieve our target. I would guess we could achieve it before 2030.
That would be an impressive achievement, certainly. Obviously, allocating to new capabilities and capacity is one side of the asset owner's approach to the kind of green energy transition. But of course, there's also the matter of engaging with your existing portfolio assets and through engagement. So I'm aware that you've set targets, particularly for some of those kind of hard to abate sectors. So I'd be interested to get your take on how effective engagement has been with those companies in those hard to abate sectors, and how you expect to take things forward.
First of all, it is a learning process also for us, because of course those who know most about the transition and the economic possibilities in those sectors are the companies actually in it.
Sure.
So that's our approach when we have these engagements, that we are not the ones who know everything. We also here to learn. But I think we have been impressed with some of the leading companies. It could be in cement and steel, for example, where electrification has been taken further than I thought, say, 5 years ago. So here has been some very positive developments. We can see electrical ovens now perform on temperatures well above 1000 Celsius degrees, and that gives new possibilities of transitioning these hard to abate sectors that we didn't see We can see it in transportation. I think you could say semi-heavy trucks like vans or even buses. They now have a very sound electrical alternative to traditional gas or diesel. Uh, so also here, even today in Denmark, actually, this very day, there is an electrical flight from one part of southern Denmark to Copenhagen, and you're flying almost 400 kilometers on batteries. So much can be done with electricity, so much more than we foresaw 5 years ago. That's the positive thing.
It's possible to identify and use kind of forward-looking indicators in terms of capex, etc., to kind of identify those firms that are kind of more forward-looking, or is it more complicated than that?
I think it is a combination of both. Of course, capex means something, but I think it's also maybe the company culture that is important. So it's also about governance and how you approach the market. But certainly we have seen some leaders in many European companies are, I think, impressing in these sectors at the moment. It could be from Ireland, Sweden, Denmark. Many interesting companies have performed here. But there are also, I think, overall, where we also have been maybe a little bit disappointed is when we look at the green hydrogen, Power-to-X development of that kind of solutions in hard-to-abate sectors has not really evolved at a path that we would have hoped for yet. I mean, if we look at electricity, a huge challenge is, of course, to develop the grid and have a modern grid, the transmission grid through the countries or the regions or even a continent. Also, the distribution grid, the local distribution grid needs to be developed, be smarter. Microgrid is a little part of that solution in the big scheme of everything. But I think here politicians need to do more, but also they know what they have to do. It's very clear decisions have been taken, so it's much more about pace. But when we look at green hydrogen and the infrastructure needed to scale this kind of solutions, I think the infrastructure is still, even the plans for the infrastructure is missing. So we have definitely more challenge here, and we hope that on a European, a pan-European level, or maybe some countries can come together and make a better infrastructure here. But electrification is a very positive story, and the possibilities with electrifications have been demonstrated to be even more exciting than we thought 5 years ago.
Good to hear. You mentioned briefly in passing policy, and obviously investors and companies don't operate in a vacuum. It's important to have the kind of the right kind of policy drivers to incentivize change in the kind of energy transition. And we know that there's been a little bit of a kind of slowdown there. What is your take on the where we stand today on the kind of policy support for the green transition? What would you like to see?
Well, I would like to see more of it. I think there are still technologies that need, we need to build out our green infrastructure, and that is a policy and a government responsibility. You cannot have us as private investors to have the responsibility for that. We can co-finance it, but the framework has to be public, and the arrangements of these deals has to involve a public authority. So we need more of that. Of course, I think we need to phase out fossil subsidies where there are, especially on a global level. There are some huge countries in the global south that have fossil subsidies, and I understand why, but they need to be phased out in some social acceptable way. I will not say what the exact solution should be for one country and another one. But of course, it is difficult to be a green investor in an environment where you can see there are subsidies to the fossil competitors. Most of all, I think we need the NDCs to be stronger at the COPs. I also think that maybe we need. We're looking at difficulties with, at least in the very short run, to reach a limit of temperature rise at 1.5. So maybe there will be. We cannot exclude that there will be some kind of overshoot within the next decades. But it's still, I think the task is exactly the same, to reach net zero as fast as possible. I think that is very clear indeed that we will reach net zero someday, but it will maybe be a little postponed in what we hoped for. But in the end, as investors, you have to understand that the low carbon solutions will be very competitive and more competitive for each year that pass. So we have to invest with that belief.
Sticking in a similar area, I guess. I wanted to kind of touch on the kind of collective approach of asset owners in the much there's been a kind of collaborative, a kind of peer-to-peer approach through the kind of Net Zero Asset Owners Alliance that is kind of helped to kind of understand best practice and to kind of use the kind of collective knowledge and influence. I was interested in your kind of view on in the context of different policy approaches across jurisdictions, whether you felt that the time for that kind of collaborative approach is over, or whether you still feel it's important for alliances such as the NZAOA to kind of continue on course.
I think the alliances is a good body to have a dialogue with politicians. We cannot come as single investors and talk to G7, G20, or at COP30. We have to have some arrangements here, and I think the Net Zero Asset Owner Alliance is definitely well positioned to be a kind of investor, or at least asset owner voice toward politicians when it comes to how to collaborate with mitigating climate change. So I think that's definitely one very important reason for this collaboration. Then of course we also discuss different solutions and transition strategies. They are not the same. We come from different countries and jurisdictions. We have different. We call our members members. Others call them clients. Some are labor market pension funds. Some are more sovereign or public funds, and some are very commercial indeed. So we come from different backgrounds, but we have this common belief together that we can earn good money by behaving climate friendly. For ourselves, we have had and we have talked to, we have a lot of dialogue with our members. Last time I met with 300 shop stewards, and they had 10 different priorities. They were all good, and we asked them to point on the most important 3 priorities. And among them, the first important number one from the 300 job steward was to make good returns. And that is what that is governing and guiding all our behavior in this space, also in the climate solution space and climate friendly space. If we cannot expect to make an attractive risk adjusted return, we will not enter in an investment, and that's how it is. We have entered a lot of investments, so we have been quite positive, and we have also a track record for many of our investments that are very satisfying. But that was number one. Number two was, as I mentioned in the beginning, the labor market pension fund was to ensure that all our investments have satisfying work conditions. And then the third one, but a very close third to the second, that was to continue to invest in climate change and make our contribution to a transition to a low carbon economy. So I think we have an understanding from our members and keep on doing what we're doing and keep on searching for new possibilities to make this transition workable and profitable.
It's interesting to get a sense of where member priorities are, of course. But I also wanted to kind of go back to one of the kind of points relating to asset owners kind of work together and also work with asset managers. Because we know that there's been, whilst the Net Zero Asset Owner Alliance has been pretty kind of solid in its membership, the other kind of Net Zero Alliance is less so, including the asset managers. I was just wondering how your kind of engagement with asset managers, how your scrutiny of asset managers to ensure that you're aligned with each other on sustainability and particularly kind of climate targets, how that has evolved recently and how you see it going forward.
Well, most of our listed equity is managed in-house, but we have a minor proportion externally managed. It's sort of, you could say it's to compete with ourselves and also to make our own management sharp. And we have had some, these are well-known asset managers on the listed equity side, and we have had some good conversations with them. I think most of them have very good data. They are very clear about how they see things, and I think we had the good discussions that also inform us about climate and transition risk and how they perceive them. But of course, the investment strategy is mandated out specifically to each of these asset managers, and we also have an exclusion strategy, of course, that also means that they have to respect. So I don't think for us this conversation is particularly important. Definitely we appreciate it, but it's not that important. While we have some other members of the Asset Owner Alliance that have more reliance on external management, and of course for them it's very important to have a closer collaboration about investment strategies and stewardship strategies as well. When we come to the private market, here many of our investments are through fund managers in the private market, and I think here more thorough discussion and due diligence is needed on our side, and we certainly have very thorough conversations before we engage with a new fund manager. And we also have a very thorough oversight of the fund managers that we have. You could say that some of the fund managers are, in fact, climate solution funds. So here it is obviously that we are on the same side climate-wise, but we of course want to discuss with them that they do not source projects and individual assets that do not fulfill our expectations of what will be a good risk-adjusted return investment. So we follow that very closely and of course work through these funds. Then we have some other funds that are not dedicated climate investors. Maybe they could have even a fossil asset, whatever it could be, a pipeline or maybe a gas-powered utility. Here we encourage them to see how in the long run we can expect and they can expect that these assets will be clever to keep in a low carbon economy.
Just finally, well, beyond the kind of issues that we kind of, or related to the issues that we've already kind of been talking about, what would you say are the topics that really kind of, or the activities that are really kind of taking up most of your time at the moment, or even keeping you awake at night?
I think we're still looking at new opportunities, and I think the most important thing is now to scale solutions to the global south, because more than 70% of the global emissions are now in the global south, and the share will only grow. We can see that China, we are not invested in green infrastructure in China at the moment, we can see that China make huge investments into green infra and climate solutions, and we will look for other countries in the global south, like other big countries like India, like South Africa, like Brazil, Indonesia, to see if there are good investment opportunities in helping them to scale renewable energy. And we are already invested in 2 dedicated funds towards this purpose in the global south. And especially India and South Africa has been very interesting for us, but we want to do much more down there. And I think that is also, if you look at the agenda of COP, a very hard topic, how we can get more investments to the global south. And we're certainly willing to participate in that dialogue, and we also have some money to put behind.
That's a great point to end on, I think, because I mean, as you point out, it's such a big part of the kind of global emissions that we know that certainly a number of the kind of pension schemes, pension funds that we've been talking to, that's very high on their agenda in terms of overcoming the kind of traditional barriers to some of those emerging markets. So Jan, thank you very much.
Good.